I like started the stream and then like I think I chugged an energy drink and it all hit and I got weird. I don't know. Anyways, hopefully the stream is good to go. And then I was trying to read other stuff that was popping up and it was like my daughter uses this new term overstimulated and I think I got overstimulated. Let's go ahead and hop into the first topic today. What is scalping in crypto and how does scalp trading work? This is something that you should be aware of as a cryptocurrency miner, and it is directly related to how profitable your cryptocurrency mining operation will be. Why is that? Well, because when you are mining cryptocurrency, you don't have to sell on the day you mine. And in fact, in a lot of cases, if you sell on the day you mine, especially in the current space, you can end up in a position where you are unprofitable. We want to make sure that we get rid of that problem by being aware of how people scalp cryptocurrency exchanges and using those strategies as well to sell your cryptocurrency that you've mined at the proper time. This is very important because like we saw with the reaction video we did from Modern Mining on Monday, he essentially had said something along the lines of like, I'm no longer profitable, I'm going to turn it off. But remember, we have 5 to 30% swings, like regularly, hourly, right now in the cryptocurrency mining space. And if you look up a profitability chart, like on a specific time, that could be shifting at like 5-minute increments. So this is very important to understand right now, especially because we are in the place in the market where we're coming into a bull run and you can be profitable, but sometimes it looks like you might not be profitable depending on your power rate. So let's go ahead and take a look and understand what this topic is. So scalping focuses on making money off of slight price swings, and that's what we're talking about today. Crypto scalpers use this method to reap quick gains from reselling assets. Although cryptocurrencies are known for their volatility, they give traders various opportunities to pocket and reinvest the gains. Scalp trading is a crypto strategy that helps scalpers to take risks and make the most of frequent price fluctuations by observing price movements. This article will discuss scalping, how it works in cryptocurrency, the advantages and the disadvantages of scalp trading in crypto, and whether it is complicated and how much money you need to engage in it. So what is scalp trading? Crypto scalp traders target small profits by placing multiple trades over a short period of time, leading to a considerable yield generated from small gains. Scalpers step in for highly liquid and significant volume assets that result in greater interest owing to the news. Scalping strategies require knowledge of the market, even though it is a short-term strategy. To capture the difference between supply and demand, scalpers use spread, which involves buying at the bid price and selling at the asking price. If traders are prepared to accept market prices, this approach permits making a profit even when orders and sales are not changed. So how does it work? Charting, speed, and consistency are the critical elements that make scalping possible. For instance, scalpers use technical analysis and various value gaps caused by bid-ask spreads and request streams. So you're looking at the charting, the speed, and consistency of this, but the general idea is you buy low and sell high, and if you implement this within cryptocurrency mining specifically, it's important to not just sell all of your crypto on a market price, right? So let's say you've been mining Bitcoin and you need to pay your power bill, and the way you mine is you mine your cryptocurrency. When the power bill is due, you hop in, you market sell your cryptocurrency, and you take whatever the market is willing to give you for it. And the problem there is whenever you click the sell, especially on smaller cap GPU mineable coins, you're just saying, hey, sell to anybody who has anything listed. And so you can have a price impact that's going to bring it down lower and so on and so forth, especially if you're dealing with scalpers as well. And so some of the strategies that you should take with mining in particular is to not wait until it's time to pay your power bill, but look and pay attention to the market at least briefly, even within the actual little time that you're deciding to sell your cryptocurrency. You can pop in and you can look for basically a little uptick before you go ahead and start selling. The other thing that can help you there too is if you're like a week ahead of time and you're seeing basically the daily highs and the daily lows. You can do this on any cryptocurrency exchange, even something with small coins like ZEGX. You can observe what the daily highs and the daily lows are, and you can set a price that you want to sell it for and leave it in that exchange until the next day. Eventually, there is a good high likelihood that the bots that are operating within those exchanges, as long as you're within the range of the 24-hour high and the 24-hour low, that they will start sucking that up from the bot perspective, right? Because their goal is to not have any big chunks anywhere up and above or below them, right? They want to kind of make sure they always have just a little bit better of a trade for you than you, and so on. So that's kind of something you can take a look at as far as paying attention to the markets, right? And it's the same thing, charting speed and consistency. Additionally, traders that utilize scalp trading techniques must respond quickly to capitalize on the minutes or even seconds of short-term volatility. In this manner, scalpers can reap benefits over time continuously. But how do crypto scalpers make money? The different scalp trading tools used by crypto scalpers to reap gains include leverage, range trading, and the bid-ask spread, as explained below. So what's leverage? Leverage describes how much traders contribute from their pockets to increase their margin. Some scalpers use this method to increase the size of their position. Range trading, scalp traders who engage in range trading watch for trades to close inside predetermined price ranges. And that's kind of the example I was using with the mining in particular, is paying attention to those predetermined price ranges just based off of 24-hour high and low. And you can get a good idea of what the market will probably pay. And the longer you have it listed, the higher likelihood that you will get that certain amount will be available. Now, I wouldn't just leave it in there, 24/7 in the exchange for days at a time, because the ranges are going to shift, and you don't necessarily need to be as efficient and consistent as, say, a scalping trader, but understanding the principles behind it can help you be more profitable with your mining. So an instance of this is some scalpers utilize a stop limit order, which is what I am basically advising that you do, which executes the trade at future market values. And this is really a very important part when we're talking about mining small cap coins as well, because if you're a big old mining whale on a speculative mine or even a smaller cryptocurrency that you have large amounts of that can affect the price whenever you sell it, you have to start becoming a responsible trader and not dumping the market over and over again. Because if you do dump the market too much for whatever particular cryptocurrency that you're mining is, you end up putting yourself in a bad position and that cryptocurrency itself in a bad position, because it'll get the negative press and the negative feeling towards it from other traders and buyers from a big price fluctuation in a downward manner. In fact, if you have the opportunity to sell a little bit, right, and then use that USD to even perform a stop limit order to buy up, if it does go down to 10%, you can even maximize your mining out of that as well. So bid-ask spread is by employing this strategy, scalpers can take advantage of the significant price discrepancy between the highest bid and the lowest ask. And then arbitrage is purchasing and selling the same asset in different marketplaces. Now, arbitrage is important for mining. I think like one of the things that you need to be careful on, for example, if you're mining a lot of these small coins, is which exchange is it selling the most on for the most on, and yeah, the most on for. So you can see that a little bit in something like Coin Market Cap, right? Where you end up going to your watch. Let's go to my watch list. Let's just pick kaspa, for example, here. And you can go ahead and see, this doesn't have all of the kaspa listings, right? But you can at least see how much volume it has and the depth and all of that to make sure you're not selling over a certain amount. And you can see where the prices are the highest. Now, in an arbitrage trade, what they would do, for example, which it won't work on kaspa in this scenario necessarily because you need to account for fees, etc., which is another big part of basically making sure your mining farm is profitable, paying attention to fees. But you can see here, as an example, you would buy it for 1304 here, and then you would sell it for 1307 here. Now, that's not going to work with the fees coming out and everything else in this particular scenario, but that's the basic idea for the arbitrage. Checking these prices for your smaller cryptocurrencies that you're mining with GPUs before just hammering, sell on A, B, or C exchange is an important thing to do. So keep that in mind. Now, there are two types of cryptocurrency arbitrage trading strategies. One is spatial arbitrage. A trader using spatial arbitrage can initiate long and short positions at various exchanges simultaneously. Traders protect themselves against changes in numerous trends this way. That's an interesting strategy that actually I'm learning about there. I haven't executed any of those in particular. I was doing more, a little bit, I guess, more simple, I suppose. This is a good one, though. Pairing arbitrage, and this strategy is only appropriate for one platform. So say you're, specifically in ZEGX, for example, and let's say you go to ZEGX, right? Let me get it up if I can. And if we go to ZEGX, right, and then we type in, I think kaspa has one, right? Kaspa has a USDT. Do they have a BTC? I thought they did. Maybe I need to just type this all the way out and it'll find it easier. So you can arbitrage between the trading price with USDT and with Bitcoin. And it is important, especially on these smaller cryptocurrencies, if they do have a pairing that is both going to be USDT and Bitcoin. At the very least, make sure the Bitcoin price isn't actually higher than the USDT price, because that may be something you want to consider, especially this day and age when you can just send Bitcoin to a crypto.com or Coinbase account and load it up onto a card to pay your power bill. It's not that bad of a strategy to just be having Bitcoin if you are getting a better trade pair out of it, especially on the day that you're actually going to convert to pay for your power. So that's another thing that you can do to help make sure that your mining farm stays profitable. So how to set up a crypto scalping trading strategy. To set up a crypto scalp trading strategy, follow the simple steps below. Now, I do not condone this. I always say mine it, don't buy it. And we are learning from this to figure out how to make sure we are keeping our profits from everything we mine. So keep that in mind. But to set up a crypto scalp trading strategy, follow the simple steps below. Choose the trading pairs. Considering the volatility and liquidity of crypto assets, choose a trading pair that suits your risk-return investment profile. Select a trading platform. While selecting a trading platform that offers your chosen trading pair, consider various aspects like trading fees, we talked about, interface, customer service, etc. Choose scalper bots. Now, obviously, we're not going to be talking about utilizing bots, but these three are definitely really important when we are talking about liquidating our mining profits. Trading fees, interface, customer service. I mean, we have seen, for example, if they don't have a good track record like Trade Ogre with Kaspa, if you can trade it on another platform, it may be something that you want to consider. And then try various trading strategies. Before scalping, ensure you understand your strategy well by trying different trading techniques as mentioned in the section above. I like how Gandalf said, I only buy high and sell low. Seems to make consistent negative gains. And that is just going back to, keeping your head about you and planning out when you have to pay for your power bill and selling those 24-hour highs throughout the month while you are running up to paying your power bill, because you don't want to be in the position where, and I always make the joke, I just paid the power and then crypto skyrockets, right? But to be fair, I'm usually trying to plan that out in reality, 30 days ahead. I'm already trying to get my power sold and taken care of, 30 days ahead of time, staying a month ahead of it. So when those pumps happen the day after my power bill was due, I can capitalize on it, right? And that's really important. So all trading strategies have pros and cons, and scalping is no exception. For instance, the risk in scalping is low due to the smaller position sizes involved. Moreover, crypto scalpers do not try to take advantage of significant price moves. Instead, they struggle to take advantage of small moves that occur frequently. However, because the rewards from each trade are so little, scalpers search for additional liquid marketplaces to increase the frequency of their trades. Now, I will say, I have seen this a ton with people in particular on, like, maybe they're new, they're on Twitch, maybe they have just like 2 or 3 viewers and they're on an exchange and they're trading for the first time and they see a little profit and they're trying to execute a scalp, right? I was watching some people do this, and the newer people would end up not taking into account the fees. It would say that they're in profit, right? And then they click the sell, but because of the fees, they actually end up losing money. I've actually done this too in the past, especially switching exchange platforms and being used to the fees on one over another, and then, selling and realizing that the fees were like a ton more. And this happens a lot with newer projects, and it's something to pay attention to. I mean, even to the point to where if you can peer-to-peer sell someone something, in one of with the liquidity bots and all that, or the peer-to-peer bots, what was the name of that one that Kaspa used for a while? Anyways, there's bots within Discord that will help facilitate peer-to-peer transactions. And just if you can unload it on somebody at a lower price than it is on the exchange, in some cases, if it's a very new cryptocurrency, that can still be more profitable than moving it to an exchange and then hitting the exchange fees on it. Of course, always be careful with over-the-counter type trades with people. Make sure you are utilizing some sort of verification bot that is going to facilitate that trade, that will verify that each person has, sent what they said they were going to send, and then it'll execute. That's always important. I love, by the way, the new glyph option for peer-to-peer trading. It's something unlike I've ever seen before. Let me see if I can show you guys. I don't think I can, because I don't think I'm actually logged in. I wonder if I can. Hold on 1 second. All right, that's fine. I wanted to make sure this wasn't an actual wallet here. Okay. So if you go now to swap, what you can do, it's not going to let me do it fully, but you can do one, and then you can go into, you can get the ticker. So we'll do GOAT. I wonder if it'll find it. No, error. Watch me try to show off something cool, and then it won't work for me today. I wonder if it won't because I don't have anything in this wallet. Anyways, what ends up happening is that if somebody posts, you can prepare the transaction, right? You can select the token down here. And then once you prepare the transaction, it essentially gives you a contract. And this is all on blockchain, right? You can post that to your buddy or to whoever you're wanting to swap with. And then they can come here, load that transaction into here, and then it'll go for you. So I think actually we can go to Radiant. Or yeah, let's go to Radiant. I think we can use one as an example. Token listings. No, we need swaps, right? So FT swap listings. See, they post these here. You basically copy this code out, paste that transaction into here. And if it's a valid one that hasn't been sold yet, which that one probably has been, I guess, it will pop up the trade for you. And then you can trade for whatever token that is. So you see here, we said, hey, use this contract. This is trading basically 2 million glyph. Is that right? 1,000 million. Yep. For 1,000 Radiant. And that's all done, you know, on chain without the interaction of third parties at all. And it's allowing you to actually trade tokens within the platform. Now, there have been other solutions for this in the past, but this has been one of the most seamless ones I've ever seen. So I kind of want to show it off because I thought it was really cool. Tangent out of the way, let's go ahead and continue. And welcome to the stream, 10 minutes to midnight. In contrast to long-term holding, day trading encourages the trader to concentrate on minute price changes. So how is day trading different from scalp trading? A scalping trader holds a financial asset for less than 5 minutes and can typically maintain a deal for 2 minutes. On the other hand, day traders hold trades for several hours. Moreover, crypto scalpers open 10-second or 100-second or tens or hundreds of trades, there we go, daily to reap significant gains. In contrast, day traders are limited to a small number of daily trades. In addition, day traders occasionally rely on fundamental analysis, whereas scalping requires knowledge of technical analysis. Scalp trading is also different from swing trading, as scalpers hold trades for a few seconds to minutes, whereas swing traders typically maintain their position for a few days to weeks or even months. Additionally, swing trading involves reasonable monitoring and current knowledge of news and business events, whereas scalping necessitates constant monitoring through the trading session itself. Now, why is this important too, though? If we're talking about smaller coins, and I'm going to show you guys something here. There's a strategy that you will see on, in particular, Solana tokens where they're trying to scam people. And what they do is they essentially will build up little by little with their own wallets, and we'll see if we can find one that does it. That didn't do it. They'll build it up a little by little, and then essentially once they get one person to buy it, they'll dump the whole thing. Now, it looks like a ladder is what it ends up looking like. And let me see if I can find, I think I took a screen cap of one the other day so I can show you guys, but that away. I thought I loaded it in here. Oh, here we go. Boom. Okay. So here is what happens is to, and this, there's a reason behind this. I'm explaining this too, by the way, specifically for when you're trading, but also to warn you guys, if you see basically a pattern like this on a new token, it means they're getting ready to dump it. So you'll see they'll buy a little, buy a little, buy a little, buy a little. I'm pretty sure it's all botted too, right? Buy a little, 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 buy a little. And then it, depending on, they're paying attention to if they're going to make money on it all. As soon as they're in the green and they can dump the whole coin, they dump the whole coin. Usually after, it's usually only one person that falls for it and does a quick buy for like 1/10 of a Solana, and then they dump it. Now, why is this important? Let's talk about this. If you are going into an exchange, a small exchange, to sell your mined cryptocurrency, right, onto that exchange, you want to be aware of what the perception of traders are in general and what they're going to do as far as buying and selling and all of that. And there really is a mental game of essentially this little bump up thing, and this is how they're tricking people, right? I'm telling you the trick now so you don't fall for it, but other people, you know, will see this, and you don't want to make the big red happen, right? People will continue to buy, continue to buy, continue to buy. You should figure out what the volume of that trade is compared to how much your mining bag is. And as soon as it ticks up a little, just sell a little. It'll come back down. It'll stay pretty flat. Let it tick up again and then sell a little. And you can do that like over and over again if you really want to min max. And obviously I'm saying on a, you know, a non-scam coin that you actually have mined, that sort of thing. But making sure that you're kind of playing those games with people so you aren't just coming in here creating a terrible chart for people to look at, then they don't want to invest in that project, right? And this is just also being a responsible miner. So is crypto scalp trading worth it? It says developing your ability to interpret charts and expanding your understanding of various crypto trading tactics are the keys to becoming a good crypto scalper. In general, crypto or scalp trading can be aggressive and demanding and may be highly draining for untrained brains because the return from each trade is so small. More substantial capital is required to produce meaningful outcomes. And of course, as there is no one-size-fits-all crypto trading strategy, one should utilize the techniques that best fit their risk-return portfolio. A lack of confidence in one's ability while dealing with risky assets may prove unproductive in the long run. The most crucial lesson for scalpers to learn is likely risk management, which is what we're also talking about with paying your power bill. Once again, we are in that area with cryptocurrency mining right now, especially on the GPU side, where within an hour, you could be profitable or unprofitable for the day. So what are we talking about with risk management for cryptocurrency mining? Well, it's making sure that on the days you're profitable, you sell it at the price that it's profitable on. On the days that you're not profitable, hold it till the next day for the day that you're profitable on it and sell it. Of course, the more miners that are executing this strategy on the smaller the coin they're executing this strategy on in particular can mean that it's a very, very difficult and tricky thing to do. So that's what I wanted to cover today. I wanted to give you the ideas of scalp trading so I could cover and expand out into how it's affecting mining, your profitability, and so on. I think right now, if you're shutting off on the red days and not mining at all, you're basically doing yourself a disservice. Those are the days that you're probably going to actually make the amount of crypto that you need to sell on a green day and make your mining strategy successful, right? And so risk management is keeping enough USDT to cover that next power bill so that you aren't forced into selling at too low of a price. And I felt like it was a really good thing to talk about. So I shouldn't market, order, sell my 1 billion of kaspa? Got it. Yeah, Josh, I wouldn't do that. You only got 1 billion, bro? I got 3 billion, dude. 10 billion. Peanuts. Peanuts. That's peanuts for this guy. Let's see. Let's go ahead and get into... I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.